Good morning, students. Yesterday, we will discuss how to calculate profit or loss under single entry system. We have to follow one formula like statement of affairs. Statement of profit or loss. With the help of statement of profit or loss, we know about the profit of the sole trader and partnership under single entry system. Already I gave four homework. I expect everyone to complete it. If you not complete, please contact through phone number. Today we are going to discuss next statement like statement of affairs. Statement of affairs resembles a balance sheet. Statement of affairs just like a balance sheet. Generally, balance sheets are two sides. One is liability side, another one is asset side. In your left hand side, liability side, right hand side, asset side. According to the accounting equation, assets are always equal to liability plus capital. Now, the statement of affairs prepare to find out the capital of the business. The statement of affairs is to prepare to find out the capital of the business. So, now I said statement of affairs resembles a balance sheet. But some difference are to be placed in balance sheet and the statement of affairs. So, the differences between the statement of affairs and the balance sheet. First one, statement of affairs generally prepare to find out the capital of the business. For what purpose to prepare the statement of affairs? To find out the capital of the business. Balance sheet. Balance sheet is prepared to ascertain the financial position of the business. Balance sheet is prepared to ascertain the financial position of the business. Second point, statement of affairs. Statement of affairs is prepared when double entry system is not strictly followed. Statement of affairs is prepared when double entry system is not strictly followed. Balance sheet is prepared when accounts are maintained under double entry system. Balance sheet is prepared when accounts are maintained under double entry system. Then third one, it is not fully like the statement of affairs. It is not fully based on the ledger balances. Some of the items are mere estimate. Statement of affairs is not fully based on the ledger balances. Some of the items are mere estimate because it records only one aspect of the transactions. So it is not possible to prepare ledger. With the help of ledger only we are going to prepare the trading account, profit and loss account and balance sheet. So double entry system is not strictly followed. So it is not fully based on ledger balances. It is mere estimate. Then balance sheet. It is prepared exclusively basis of ledger. When the balances of ledger, we are going to prepare trial balance. With the help of trial balance, we are going to prepare trading profit and loss account and balance sheet. So balance sheet is depend upon ledger balances. Then fourth one, it is not reliable. Which one? Statement of affairs. Statement of affairs is not reliable as it is based on incomplete record. As it is based on incomplete record. It is reliable as it is prepared under double entry system. It is reliable as it is prepared under double entry system. Then fifth point, statement of affairs it is difficult to trace the items omitted as complete records are not maintained because we record only one aspect of the transactions. Another aspect of transactions are completely omitted. Generally, each transaction has two-fold aspect. One is recorded, another one is omitted. It is difficult to trace the omitted items. But in balance sheet, both the aspect of all transactions are recorded. It is items omitted can be traced easily. Items can be omitted, traced easily. These are all some of the difference between statement of affairs and balance sheet. Next, we come to statement of affairs. Now, this is the statement of affairs format. Now, the format of statement of affairs. One is liability side, another one is asset side. Left hand side, liability side. Right hand side, asset side. Some of the items appear in both sides of the statement of affairs. First, liability side. What are the items appear in the liability side? Sundry creditors, bills payable, outstanding expenses, bank overdraft, then capital. This is the balancing figure. Then asset side, cash in hand, cash at bank, sundry debtor, bills receivable, stock in trade, prepaid expenses, and the fixed asset. Fixed assets means land, building, furniture, machinery, motor car. These are all some of the example of fixed asset. So liability side, it is a financial obligation of the business. Asset side, it is a properties possessed by the business concern. Assets are always exceeds liability. That is, asset side is a greater than liability side. The difference amount should be treated as a capital. Assets are always exceeds liability. The difference amount should be treated as a capital. For what purpose? To prepare the statement of affairs? To find out the capital of the business. Now we are going to prepare two statements. One is opening statement, another one is closing statement. Opening statement is prepared to find out the opening capital of the business. Closing statement is prepared to find out the closing statement of affairs. Okay, closing statement is prepared to find out the closing capital of the business. Opening statement is prepared to find out the opening capital. Closing statement of affairs is prepared to find out the closing capital. See, some of the adjustments are appear in closing statement, not in opening statement of affairs. Some of the adjustments means like depreciation, bad debts, provision for bad and doubtful debts, any outstanding expenses or any prepaid expenses. These items are to be adjusted only in closing statement, not in opening statement of affairs. Then come to illustration number 1, page number 11. Sorry, page number 10, illustration number 6. The following are the balances of Shanti as on 31st December 2018. Bills receivable 6,000, bills payable 4,000, machinery 6,000, furniture 10,000, sundry creditor 25,000, stock 45,000, debtor 70,000, cash 4,000. Out of these information, now we are going to prepare statement of affairs for calculate capital as on the date. See, illustration number 6.